All right, let's dive right in. Today, we're breaking down Stagwell's Q2 2025 earnings report, and this one really turned some heads, lighting a fire under the stock. So let's get straight to what happened. First things first, here's the number that got everyone talking. An 11% pop in the stock price in a single day, right after they dropped the results. And this wasn't just a small move on low volume. We're talking nearly double the average number of shares changing hands. That tells you there was real conviction behind this rally. So that brings us to the big question, right? What exactly was in this report that got the market so excited? Let's unpack it. Okay, first, let's grade the big headline numbers. How did Stagwell actually stack up against what Wall Street was expecting? So on the surface, things looked pretty solid. They beat on revenue, coming in at $707 million, a nice little jump over what analysts were looking for. And earnings per share, right down the middle of the fairway at 17 cents. A good report card, but probably not enough to cause an 11% surge. Because, as is usually the case, the real story wasn't in the headlines. You had to dig a little deeper to see what really got investors excited. It was all about what's happening under the hood. And this is where it gets interesting. Yeah, overall net revenue grew a healthy 8%. But once you strip out their more unpredictable advocacy business, that growth actually jumps to 10%. And then, look at the marketing cloud. That's their tech and software division, up a whopping 28% year over year. That is the kind of high-octane growth the market absolutely loves to see. The good news didn't stop there. The numbers that point to future growth were also really strong. They brought in $117 million in net new business this quarter. And this is huge. It's the fifth quarter in a row they've cleared that $100 million hurdle. That tells you this isn't a fluke. It shows they have a really powerful sales engine that's consistently winning business. So, the obvious next question is, how are they doing it? How are they winning all this new business? Well, if you ask management, the answer is simple. It all comes down to their big bets on technology and AI. CEO Mark Penn basically laid out their whole game plan with this quote. He's saying, look, those giant legacy advertising companies, they're too big and slow to adapt. We're nimble. He's positioning Stagwell as the challenger that can move faster and embrace AI way before the competition can. And the core of that strategy is what they call the machine. Now, what is that? Think of it as the company's brain and central nervous system all rolled into one. It's a single platform that connects all their data, all their teams, and all their AI tools to make them smarter and faster for clients. And this isn't just talk. They've got a very clear roadmap. They're pouring about $20 million a quarter into new tech, plugging it all into the machine, and then unleashing AI across the entire business. And here's the payoff. They're targeting about 15% in real cost savings by early 2026. That's a tangible goal. All right, so we've seen the strategy. Now let's see how that translates into the promises management is making for the rest of the year. And this is maybe the biggest vote of confidence from management. They didn't just meet Q2 expectations. They stood by their full-year guidance. They're basically telling the market, what you saw this quarter, that wasn't a one-time thing. We expect this momentum to keep going. And beyond the exciting growth story, the company's financial health is getting better too. Cash flow is way up, they're buying back their own stock, which shows they think it's cheap, and their cost-cutting is actually ahead of schedule. They're also chipping away at their debt, bringing their leverage down. These are all the signs of a really well-run ship. Now, this quarter was an undeniable win, no question. But to really figure out what to do with a stock, you have to zoom out and look at the bigger picture. And this is where things get a little messy. Because even with this great quarter, if you look back over the last year, the stock has gotten crushed. It's down over 25%. While the rest of the communications sector is up almost 40%. That's a massive gap. So this really frames the whole debate. The skeptics look at that one-year chart and say, this company has been a serial underperformer. But the optimists? They're focused on the last 3 months, where the stock is rebounding hard. They say this is the proof that the new AI strategy is finally starting to work, and the turnaround is real. So, you weigh the incredible operational strength against that lingering skepticism from the market, and where do we land? What's our call on Stagwell from here? Well, before we give our official rating, we need to know what to watch for. What does the company have to prove to keep this rally going? Here's the checklist for the next quarter. First, all those big client wins need to start showing up as actual revenue.
Second, they've got to hit their second half targets. No excuses. Third, we need to see their profit margins actually start to expand because of all this AI and cost cutting. And finally, let's see some progress in that new government business they're building.
All right, taking all of that into account, our official rating is outperform. We believe the momentum is real, the growth underneath the surface is accelerating, and their AI strategy is one of the clearest in the industry. We think that now outweighs the stock's poor performance in the past. It feels like the turnaround is finally here. And that leads us to a specific idea on how to play this. A pairs trade. You go long Stagwell shares and at the same time short sell one of those big legacy advertising companies that's moving like a snail when it comes to AI. It's a direct bet that Stagwell will keep stealing market share from the industry giants. This is not financial advice.